So obviously it's a huge deal. You have created and will become, under this deal, the 5th largest U.S. retail bank. A lot of the analysts understand why BBVA's U.S. presence, they like the Texas exposure and other fast-growing geographic spots, but are wondering why now. So help us understand that, Bill.
Well, I mean, look, since the last time I was on your show, we've been pretty clear about taking the non-strategic asset, which was BlackRock, a great company, but deploying those proceeds into a franchise that would give us growth for years to come. And that's what we've done. You know, BBVA has been on the top of our kind of hit list for the last probably 5 years as we look at the markets they operate in and the complementary nature of those markets to what we do. You know, the why now, you know, look at some of the news this morning. But basically, when I was last on your show, you'll remember we didn't know if the mortality rate from COVID was going to be 1% or 10%. It was a different period of time. And I think particularly with the news of the vaccines, we now have a sort of the downside risk defined, I think, in terms of what might happen to the economy. You know, we see an end to this. We see, because of the low interest rates, a need for scale to be able to grow our franchise. So, you know, it worked out. It's a great deal. It puts us in a great market. It's going to give us a growth opportunity for the next 15 years.
Yeah, I was going to ask you, you mentioned already, but to what extent news like today, good news on the vaccine, play a role into helping you see through to the other side, especially, Bill, because when you sold the BlackRock stake, there were broader questions about what you saw coming down the road in terms of bank credit quality and just what the picture and the outlook looked like, and if it was worse than maybe even the market was expecting. It sounds like a lot's changed.
A lot has changed. I mean, you know, as I said, we really didn't know a lot other than we were in for a tough period of time when we sold BlackRock. Since then, we've actually seen, you know, as you're aware, you know, assets appreciate across the board. We've seen massive fiscal and monetary stimulus, and then we've seen good news on medical progress on COVID, both the treatments to the extent you get it, and now with the vaccines, you know, coming hopefully in the spring. And so that takes the tail risk out of a transaction like this. And allows us, you know, instead of focusing on surviving the moment, which was in some ways our fear in the spring, into, you know, how do we turn this dislocation into a growth opportunity, a long-term growth opportunity for PNC? And that's what we've done.
Well, there are questions, though, because, Bill, you mentioned assets have risen. One of those is BlackRock itself. Yeah. Since you sold it, the stock has rallied almost 50%. So I think there are some questions on growth for you about why this is a better trade.
Yeah. So Sarah, life isn't a game of perfect. You know, at the end of the day, we have taken an asset that was non-strategic to us and monetized it and effectively, for the same financial metrics, given ourselves a growth platform for 15 years, right? So from book value to earnings basis to capital post-deal close, all of that stuff is the same or better. And we now own a franchise that we can add substantially to through revenue synergies that'll come in the out years of this, and something that we control and something that we're good at. You know, we've done this through the years, first with National City and then with RBC or RBC USA. And we're really confident we'll be able to take what they have and the growth markets they're in today and bring our products and services and go-to-market strategy and grow that franchise substantially.
Shepard Smith here. Thanks for watching CNBC on YouTube.